And so we went for this environment where we went from in 2022, right, 30 zombie banks. And for context, what zombie banks are banks that basically aren't working, right? They're not actually making loans. They're just kind of surviving off their existing loan book. But PNC, right, well-respected bank and research shop, put out in 2022 that they were seeing basically 30 zombie banks. Well, another research shop, FIC, in late 2024 came out and said they were estimating 265 zombie banks were out there. So when we actually look at it from Altimetry's perspective, we did our own research on our own zombie bank report, and we looked at all the banks that are greater than $50 million market cap, meaning, right, when you talk about 265, that includes a lot of those small banks that Joel was talking about, and in New Jersey or in a Sioux Falls, South Dakota. But we just basically said, let's look at the big banks, the banks that are big enough that they're investable. We found of the 300 or so, right now, 65 are what we'd call zombies. So that's 20% of banks, up from 12 in 2022. So Joel, that's a pretty steep jump that really calls for some changes in bank regulation, right?
It does, and then you have to say, is this a crisis in terms of, we're not talking about the 10 biggest banks in the U.S. We're not even talking about of the 300. Most of these, I'd say, Rob, are on the bottom half of the size of the bank, which means this isn't a banking crisis, these zombie banks. It's an unbelievable opportunity. It's an unbelievable opportunity.
Exactly. And so when you look at it, we've seen bank consolidation. When you just think about FDIC insured banks, so not the credit unions and everything else, which gets you that 8,000 that Joel said, that you said, we got to get about 4,000. And if you talk to anybody in a regulatory world, what they'll tell you is probably we need 1.5 to 2,000 banks, not 4 or 8. What's a good thing is, and this comes the idea of, even though we've got these zombie banks that need to be digested, we've got banks that overall have, when we look at it from a uniform accounting basis, really, really healthy ROEs right now. So, right, we've got uniform return on equity, which is when we clean up all the data and we look at what real profitability is for banks. The average bank in the US right now, publicly listed bank, has about a 17% ROE. That's like 2 times what their required rate of return is, what they need to basically justify their existence. And that means we've got a lot of banks that can definitely absorb some of these zombie banks. And if Bowman gets in and starts to let consolidation happen, that's a really good thing, Joel, right, is the point that we're making here.
Yes, I think it leads to an opportunity because, I mean, some of these little banks, they're decent, but they're just overexposed. They're so small that when their client base is only one type of client, like office real estate, and office real estate's bad, they don't have anything to offset it, right? And yet there are good loans there, whatever else. It's just that these banks can't survive on their own. If we see some consolidation, the larger bank can, one, make sure that the smaller bank doesn't actually go under, or the FDIC doesn't have to take it over like they had to do with Silicon Valley Bank or whatever. They're small enough. And that's why I said this isn't a banking crisis. This is an opportunity, because of these 20% of the 300 or so banks we looked at, the bigger 300 banks could easily absorb these 65 and actually make them viable again, and make sure the depositors are still, those deposits are, Rob, you say unlocked,